Welcome, welcome, welcome. Tonight we are discussing one of the most dreaded and one of the problems that affects millions of home buyers. Qualifying for a mortgage with a high car payment, right? So, hi, I'm Kevin Jefferson, the People's Lender. Tonight we're going to discuss purchasing a home, not only just purchasing a home, but the effect that a high car payment has on purchasing a home, right? So, what I've come to find is many people who apply for mortgages typically have one, two, sometimes three car payments, right? Now, the average car payment is around $600 a month. Or, even sometimes close to seven. Having a high car payment of around $700 a month has a huge impact on your ability to qualify for a mortgage. It can impact your ability to purchase anywhere from 75 to $100,000 difference. So having your car has a huge effect on what you qualify for or if you can even qualify. So a lot of times I advise borrowers to purchase the home first because you can typically purchase the home and then get the car, but doing it the opposite way typically becomes more difficult. The other thing that I see is that whoever has the better credit typically has the cars in their name. So if you have better credit and you need to get a car for your wife or your husband or your sister, brother, or kids, and all of those car payments are on your credit, when you go to apply for a mortgage, all of those payments are going to have an effect on your debt to income ratio. So each car payment that you have affects your debt to income ratio. The debt to income ratio, by definition, is how much money a borrower has coming in versus how much they have going out, along with your housing payment. So if you don't make a ton of money, but you have two or three, five, $600 car payments, that's most likely going to disqualify you for qualifying for a home. Now, I'm not saying that you won't qualify at all, but the amount that you qualify for may not allow for you to be able to purchase a home. Again, if you have car payments, or let's say if you need a car, but you also want to purchase a home, I would try to hold on to the vehicle that I have for as long as I can until I obtain home ownership. By doing that, you no longer are increasing or affecting your debt to income ratio simply because you've held off on the car payment. Once you've purchased the home, then you can go out and look for the car. Otherwise, you're going to affect the amount that you could qualify for. So if you're a borrower, you have no car payment, and then you decide to go out and buy a car payment, and it's $700 a month payment, and then you decide, hey, I've got the car now, and I want to buy the house. I would like to apply for a mortgage, and you go apply for a mortgage. And let's say the only thing you have on your credit is the $700 a month car payment. And let's say they say, hey, you can qualify for $150,000. If you didn't have the car payment, that could potentially have been $250,000. Huge difference in terms of what you have the ability to buy for a home in this market. Housing prices are up. Interest rates are currently at 22, 23-year all-time highs. So you want to try, when you're going to buy a house, you want to try to maintain as low debt to income ratio as possible. Now, let's adjust my seat. Now, there are ways to get rid of or not to be able to use that payment, not to be able to use that car payment that you have on your credit. So let's take the example that I just spoke to you about. And we are talking about, hey, I have 3 cars on my credit. One I pay myself, the other one my wife pays, and the other one my son or daughter pays. If you can provide documentation showing that the other person makes the payments on the vehicle for the last 12 months out of an account that does not have your name attached to it, we have the ability to omit that payment. So in that case where, let's say you had 1 car on your credit, like in the example I previously gave, you have the 1 car on your credit that's $700 a month, and you went to get pre-approved, and now, I mean, then you could get 150. If we could get that car, show that that car is not being paid by you, that 150 pre-approval has the ability to increase possibly to 250. So that is huge. That that could allow for you, now you're in a position to either be able to buy um, something that is more comparable to what you're maybe looking for. A lot of times people get raises and they increase their debts by potentially now buying the car they want because they can afford it a little bit more. I would advise you to see how much your increase in your pay is per month. And if that's the case, if it can offset the car, I would say, hey, it's a possibility if it is a must and if it is needed, right? If it is a must to have and if you really truly need it, then possibly buy. If you can hold out at all and not purchase the car and wait until you have become a homeowner, then that is going to be your best bet. When I say purchase a car, that goes for lease payments as well. Lease payments get counted in, even though there's a defined time that the lease is up, we still count that lease payment in. And oftentimes, if it's a lease payment, we can't, we don't have the ability to omit it because now you don't know when the lease is up. If you have 10 months left on a car payment, it's possible that we could omit that car payment if the car is not, if the car has 10 or less months of payment, and if it is less than 5% of your monthly income per month. The rule used to not be that. It used to allow for you to, if it was below 10 months of payments, then you could not carry it on into your debt. But FHA changed the rule to where, hey, no, they don't have more than 10 months of payments left. But if it's more than 5%, we want to make sure of their monthly income, we're going to make sure that we count that into their DTI unless it's fully paid off. The other thing is, if you have a $700 a month car payment, you need to qualify for more. I mean, there's ways that you could potentially, so let's take the example of, hey, my wife's car is in my name. Let's see if we can put that car in her name. If you can refinance the car and get it into your wife's name, refinance to get into your husband's name, then that's another solution on how you can get rid of that $700, $600, $800 a month payment. Same thing if it's your son or your daughter. So the options are, we provide proof that the person's making the payments on time from their account without your name on it. It has to be 12 consecutive payments. If it is not, if that's not possible, then we go to the option of seeing if we can refinance that loan out of your name into the person who actually pays for the car's name. Maybe now they've established credit. Maybe now they have, or now they have the job that they need that allows for them to qualify. So that's an option as well. Another option is, let's say this is your situation and you're looking to purchase a home the next 6 to 12 months, if you've already, so one option is if you already start the process and that person is paying the monthly payment out of their account, then that's great. Then we need a 12-month history. If that's not the case and you need to move faster, what we need to do is to look and see if the person has the ability to refinance the loan into their name. Again, guys, if you're joining this, just join it now. We're discussing the impact on your ability to get pre-approved from a car payment. I've used the example of $700 a month. $700 a month can decrease or increase your payments. I mean, your amount that you're approved for anywhere from $75,000 to $100,000. So having multiple car payments affects your credit along with your other debts. Yes, we can. There are ways to omit those payments. Having a person refinance if you're less than 10 months out on your payment, and that payment if that payment is less than 5% of your income or monthly income, then we can omit it if it's less than 10 months. So there are ways to omit it, but it has a huge impact on your ability to purchase a home. So what you want to do is, before you make any moves, while I'm giving you this information, disclaimer, before you make any moves, you want to sit down with a lender and make sure that is specific to your situation. So let's go in the reverse, right? Let's say you are looking to purchase a home, you have a car, and it's not in your name. How will we find out if you potentially have a car if you don't tell us? Depending on where your car payments come from, if the underwriter or we see that you're constantly paying out $650 a month on a regular basis, the underwriter is going to say, hey, what is this $650 a month that's consistently going out? I recently had that with the client who was making payments on something that he financed, but it was not on his credit. And the underwriter saw that every pay period or every week, X amount of dollars was coming out of his account. And they finally asked, what is this coming out of your account on a consistent basis? So remember, we're not just looking, when we look at bank statements, we're just not looking for your deposits into your account. We're not just looking for large deposits to your account that are outside of the norm. We're looking for things that are going out that may not show up. We're looking at your pay stubs, or we see this reoccurring payment for child support. Then we're going to have to count the child support if it's going out. If we see $650 a month consistently going out of your account, the underwriter is going to ask, can you give us a letter of explanation as to why every month you're paying $650 out of your account? If it's rent, that's fine. If it's some other kind of where you're taking $650 and you're moving it from your checking account to your savings account, that's fine. However, if you are in fact making the payments on a car or some type of vehicle, then we need to make sure that we count that into your debt to income ratio. Again, guys, thank you for joining it live. If you have any specific questions, drop them in the chat. I am here for you. If you're just joining this live, we are discussing the effects of the car payment on home ownership, how it can affect your pre-approval amount. Also, if you're new to the channel and you like the information that you're getting, do us a huge favor. If you like this video, give us a thumbs up. Subscribe to the channel so that we can get so you can get notifications on when we are going live, when we are discussing or topics that we're discussing, or when videos are done. If you are new to the channel and you have not joined our exclusive Facebook group, the link will be below. In our Facebook group, we have daily From Monday through Friday, we have daily mortgage trivia, wins, Monday mortgage tips, Tuesday tips, FICO Friday. So FICO Friday, we discuss credit and how to improve your credit or things about credit, little known facts. So it's an interactive group that we're growing and trying to grow a community. Win Wednesdays is when you win. What did you do this week? What was a win for you this week? Did you apply for a mortgage? Did you get pre-approved for a mortgage? Did you close on a home? Like all of those things we want to share in the group and build a community. Again, if you're watching the replay and you have a question pertaining to this topic on cars and how they affect home ownership, do us a huge favor, drop a comment below so that we can answer your question. We're constantly checking. We do our best to constantly check for your for comments and questions. We thank you for joining and listening in. So we try to interact with our clients. If there's questions that are a little bit too long for, if there's questions that you have that's a little bit too long for the chat or the comments on YouTube, then the link below will be available for you to join my schedule, get on my calendar and do a one-on-one Zoom call with me so I can answer any questions that you may have. And hey guys, shameless plug. If you have been watching and listening and looking at me and finding that the information that I provide has been valuable, when you go look for a mortgage, give me a shot. Give me a shot to give you a game plan on how my team and I can help you become homeowners. All mortgage lenders are not created the same. Some tend to work harder or have a better knowledge base. And there's things that some don't know. Some mortgage companies don't allow for certain things, whereas others do. And when I say mortgage companies, that goes for credit unions, that goes for banks, that goes for brokers. Just different, different ways to get pre-qualified. But it's not always just the company. If the actual loan officer that you have or that you get in contact with does not have the knowledge base, nor does he or she go out to seek answers, then that may not be the right loan officer for you. So that was my shameless plug. If you're interested in working with me and my team and purchasing a home, the link will be below. My email will be below. I have the ability to help you in all 50 states as well as DC. All 50 states as well as DC. The person you will be working with in the transaction will be me. It will not be handed off to someone else. It will be me, Kevin Jefferson. And during the process, you will speak to other people, which will be my teammates. However, I can help. I can now help in all 50 states and the District of Columbia. Again, if you are joining the live late, we're discussing how car payments have an effect on home ownership, what you can do to get rid of the car payment or not have to count it into your debt to income ratio. We also discussed when you should buy. So if it's between a car and a house and you can hold out for the car, please do, because it will affect your ability to purchase. Also, we are going to start going live a little bit more consistent. I would love some feedback. If you're watching and you have a question, send me an email, drop it in a comment. If you have a topic that you want me to discuss or need more information on, do me a huge favor and reach out and let me know what that question is, or not necessarily just a question. Let me know what the topic is that you would like to hear about. So currently, we're also in a market where there's still home buyers who are looking to purchase. And in this market where the buyers are looking to purchase, one thing that they're up against is rising interest rates. So that's why it's kind of where this topic came from. I've been, I look at a ton of files, right? Or people who can or can't get pre-approved. And what I find is car payments and student loan debt hinder the borrower. Like if you make $50,000 a year and you got a $700 a month car payment and let's say $30,000 in student loan debt and you're looking to purchase a home, it's going to be very tough depending on where you live at, what type of house you're looking to buy. And that's just being realistic. We're starting to see where there where there needs to be multiple buyers on the application, whether it's 2, I've seen 3, I've seen people try to do 4 just to try to create more income so they can buy a house and not have to rent with the steady rising of rental rates. Again, one way of doing it is to try to alleviate a new car payment or figure out how you can. I've even had clients sell their car because they didn't necessarily need a second or third car, sell it so that they can get their debt to income ratio down, and then they were able to go and buy. Not just car payments, you have credit card debt. Credit card debt has an effect on your debt to income ratio. Student loan debt has an effect on your debt to income ratio. Income, if you have the ability to try to work a little bit more overtime, I would work more overtime to try to pay some of my debt down. Now, you don't want to work overtime to try to buy more things. You don't want to work a second job to try to buy more things. You want to use those two tools to be able to buy down on your pay down on your debt. The lower you try to get your debt, it has an effect on how much you can get pre-approved. If you make $150,000 a year, you don't want to be spending $150,000 a year. You want to make sure you keep your debt to income ratio low so that when you go apply for a mortgage, it allows for the lender to approve you for a home, or at least a decent home, so you can get into it. There are ways that you can alleviate some debt or show that you don't pay debt. There's ways to try to get approved for more by purchasing, multifamily homes, using the income, putting down a slightly large payment, asking the seller to do a permanent buy down, maybe a 2-1 buy down that alleviates some of the stress of a payment over the course of 2 years, 3 years, 1 year. And then you take that extra money and use that to pay down debt. The goal is not to go into more debt. Even though a house is going into more debt, it does become an asset. But you want to use the opportunities now to take any extra money that you save and just pay down on debt. One tool is even going into your 401k and using that to pay down on debt, or using that for a larger down payment, or using that to bring for your closing costs and down payment. So there are a lot of ways that you have the ability to pay down on debt. If you're new to the channel, do me a huge favor, subscribe up top. And if you like this video, get the YouTube algorithm pushing us out and give us a thumbs up. Also, we have my home buyer's journal. It is a 90-page comprehensive journal that has everything from a budget to important contacts to credit information, information in note sheets where you can ask the lender questions, the realtor questions. You can notate anything in the book where you have information on once you purchase the home, on where the housing utilities are. So if anything were to happen to you, someone knew who pays where the water bill goes, the electric bill goes, the gas bill, of course, phone, if you have a home phone line and cable. And then you can also take pertinent notes in the book under the under the housing section to where, hey, in 2024, I upgraded the hot water heater. 2026, we got a new furnace or air conditioning unit. The roof was changed, so that when you go to sell your house, you have the notes and don't have to remember when you need to fix something, but also along your journey, you have the ability to take notes so that you don't have to try to remember or put on different sheets of paper what it was that your realtor said to you or your lender said, or what 123 Main Street looked like versus, 2nd Street. Again, the link will be below to purchase it. Those go for $29.99. So you do me a huge favor. If you're interested, it could be a great Christmas gift. It could be a great gift for your kid or someone you know who is looking to purchase a home. This is very valuable information. And we have a question. Would you suggest refinancing a car before applying for a mortgage? That's a great question. I'm gonna say I would inquire about refinancing the car before you purchase the home to see if it makes a significant difference in what the payment is going to be. Typically, when you refinance your car or refinance, you could potentially be affecting your credit score. So your score could potentially go down because of the refinance. But if you refinance and you're saving $25 a month, then it's probably not worth refinancing. But if you refinance your car and it will save you $100 a month, $150 a month, I would say yes. I would say yes. Cool. You paid your car off. You paid your car off before you applied. That's awesome. Um, yeah, I know what you meant. Thank you. Hopefully that answered your question, Ant 2000. But yeah, you can always call and get an estimate of what it would be to refinance your car. I would go to, if I were to refinance, I would try to find a credit union um, to see if they can refinance me. They typically have the better rates and options. So I would go to a credit union to refinance my vehicle and see if it made sense. Once you know that amount, I would apply. Um, I would let the lender know and then let them know, hey, my car payment is no longer the car payment is no longer 750 now to 650 600 a month. I'm saving 150 dollars a month. So that is, yep, that does put you in a better position. Again, guys, if you're just joining the live, we are discussing car payments, its effect on your pre-approval amount. I've given you some tips and not necessarily tricks, but some tips on how you can get rid of or not have to use that car payment into your debt to income ratio. Of course, your lender has to be knowledgeable about it, as well as everything has to be lined up. Again, one way to do it is to make sure if it's your wife's car that she pays all the payments out of her account that your name is not on, and make sure they're on time, of course, right? Because if they're late, then it's going to affect your credit. Make sure that when you get the car, if you have to have it, you know why she doesn't qualify for the car, right? If they don't qualify for the car simply because their credit's not high enough, then if you do get it, if it can't wait and you do have to get it, then while you're paying payments on it, and let's say you have a 12-month window, you need to work on improving their credit so that we can either refinance it sooner than the 12 months, or after the 12 months, you can have it taken off of, not taken off your credit, taken out of your debt to income ratio, but there can't be any mishaps. It has to come directly from an account that you are not attached to. Not in 12 months, not one payment can come from there showing that it came from your account. Hey guys, if you have any questions, drop them in the comments. If you have any comments, drop them in. Has anybody in YouTube land gotten pre-approved this week? Has anyone found a home? Are they out looking for homes? Just trying to grab some feedback and see where you guys are in your home buying journey since you're out here listening to me consistently. Again, if you're looking to purchase a home and you want an opinion from a lender, or you currently have a pre-approval from a lender and you want a second option or second set of eyes, reach out to me, book a consultation call. It's free of charge. I'm never going to hurt you. I'm always going to try to help you. And I'll be honest and tell you, hey, I think we can beat it, or hey, stay where you are. It's what you got is awesome. Okay, thank you. My credit is in much better place now that we got 12% now. Now we should get 5% with Navy Federal. Yeah, that's going to be a huge savings. If you have the ability to refinance and get, slash your interest rate in half, that's going to be huge. So yeah, that is a good option. Looking this weekend, got pre-approved. Awesome. Congratulations. I'm glad you were able to get pre-approved. Again, if you have not joined our Facebook group and would like to be a part of it, the link will be below with our Facebook group. If you are new to the channel, subscribe so you can get the notification button, as well as if you have not already asked your question or you're watching the replay and you have a question, drop it in the chat. Also in the description, you will see a link to book a call with me, a one-on-one Zoom call with me to answer any questions that you have and take you through the process, as well as if you want to email me and you have questions or get in contact with me, my contact information will be below. If we don't have any additional questions, I'm going to end this live a little early. It's been a long day. But again, thank you guys for coming out. Thanks for joining. If you have any questions, concerns, comments, drop them below or look at my contact information below and reach out to me. And for that, I'm Kevin Jefferson, the People's Lender. Have a good night.